Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some options data. But anyways, let's switch over to NEO. I've got three contracts on this one. First one is the $10 call expiring May 16th. Planning on getting out of this one at, just selling, one contract at break even, another at 10%, and the rest at 20%. Which would be at 18 cents a contract, which is, more than 2x from where we're currently trading, ranging from about 7 to 9 cents per contract. I have been buying this one more aggressively over the past week or so, really just buying dips ranging from about 10 cents to down to as low as 8 cents. I did have some buy orders placed for 7 cents, but those just haven't gotten filled, so it is what it is. And then also looking at the $8 call. This is the OG contract that I was initially looking at because of this spike here, which only corresponded, that's in volume, which only corresponded to an increase in total premium of around 250,000. But we have seen the open interest going up, so feeling better about that. The May one I will come back to. Open interest is up, but it has been fading, so maybe not looking so good there. Maybe that one is going to be a loser. Over here, I do have, limit sells. This one contract probably at 10%, the rest at 20%. And, I did buy one contract last week for this one at 22 cents. Could have gotten some lower than 20 cents, but just kind of focusing more on GTFOing this May expiration with my average at 15 cents. Then the June one, my average at 44 cents. So that's about 2x from where we're currently at. But, I just need to get out closer to my average. And then I also have this other contract. This is the $15 call expiring in January on the 16th of 2026. I have not been buying this one the past couple weeks. Last time I bought was at 30 cents. My average is around 33. And, the premium is right around a little bit lower than my average. I don't have any limit sell orders placed on this one because I want to, get out of these other contracts first. But anyways, let's look over at the NEO chart. So we can see that one. I do have this light blue uptrend giving me a little bit of hopium maybe that we are respecting that. Also do have this 786 from this retracement. We did go below it and then go higher. So maybe that is not valid, but just kind of hoping convergence of levels there. Maybe that is going to be acting as some support. Looking more fine-tuned, we are below not only the 150 and 21-day moving average. Actually, 21-day moving average is at $4.23.9. We closed just barely above it, being up almost 1% on the day Friday. But that is relative to the previous day's close. It was a red day, as in it opened higher at 428 and closed lower. But yeah, getting rejected from these moving averages. But as you can see with this yellow downtrend, it does look like we do have this kind of wedge here. Might be breaking out very, very soon. We'll also have, a bigger picture downtrend in orange going back quite far in time. And so I am really just hoping for some Chinese stimulus to kind of launch this above these levels. And so if it would be able to get above these moving averages, I think that would look just great. And actually, we can maybe look back in time when those moving averages were lined up like that with, let's see, so let's see. Oops, I don't want to move that. Let's see, the blue to yellow to orange. And so the last time that we saw it like that was right here. And so we did see moves to the upside, but that was following, some down moves. So maybe we do see a fake out break down to around 361. So, good to be prepared for that. But I am holding my breath. Can't wait for this to break out. But let's look over at some options data that might shed some light on it. I'm not going to look at all of the contracts individually. I'll just look at all the data from all of the contracts. And so we can see here from Friday, just looking at the 1 day, we can see that volume was increasing for generally over the course of the day, but it did close kind of flat. Looks like volume increased by only 729 contracts, with the net put premium coming down by almost $49,000. As you can see over here, the red line is below the zero line, and the net call premium increased, but only by 4.35 thousand. It was a lot higher up here, being up by net call premium being up by about 269,000. But yeah, does look like that came down. Overall, this does look like, net bullish considering the bear bull slider, but it's only 47%, so it's about 50-50. So take that with a grain of salt. But it is good to see that the net put premium was coming down, whereas the net call premium went up. And if we do look at this over the past 14 days, what we can see here is that we have seen, kind of going back and forth. It's kind of showing some mixed signals. Net put premium being up here, so that's bearish. When net call premium is down, also bearish. But then over here, starting to see net call premium going up with net put premium coming down. That is looking more bullish. But here it's looking kind of quiet. So maybe that's a sign that this is going to break down, or maybe we are going to see some announcement of Chinese stimulus and this is going to skyrocket. So that's what I'm hoping for. But hope is a 4-letter word, so do be careful with that.